On the 17th of June 2012, I was in a life-threatening accident that put me in a coma. And that's when I learned firsthand that if your business relies too much on you, you don't have a business. What you've really got is a job. This was the wake-up call that forced me to change everything. And ultimately, within 12 months, I sold my company in a 7-figure exit. But in this episode of the podcast, I'm not just going to talk about my story. I'm going to share with you 7 strategies from 7 different entrepreneurs that I helped to go from 7-figure revenues to 7-figure profits. I'm going to share the specific steps that they did so you can replicate their strategies and replicate their results. Going back now 13 years, the one thing that I know is that you can never truly know what's going on with somebody in the room. You can never really know what's going on at home. So the world might be in chaos right now, but there'll be, by the law of averages, there's a few people in this room that are going through significant turmoil right now. And I read somewhere that on average, every 5 years, there's a quite significant life event that kind of goes on. And of course, the personal stuff affects the business and the business affects the personal. It's all kind of intermingled. So for me, back in 2012, I had a very serious accident. And I was in an Ironman triathlon. I came off the bike and I was thrown into a tree. And I hit the tree so hard, my helmet split. The last thing I remember was being in the race. I remember, classic movie style coming around, it all being a bit blurry, and my wife saying, Dan, you've been in an accident. And it turned out I've been in a coma for 2 or 3 days, and I had a traumatic brain injury. And the next kind of 4 months were horrendously awful. I couldn't concentrate. It was extremely painful, tremendous mood swings because it messed up the part of my brain that affected the hormones. So I was all over the place. And I had a lot of time to reflect and convalesce. And I said, okay, what do I want to do? Because I couldn't really concentrate. And I realized I've really messed this up. Because at the time I was 28, I think. Throughout my whole 20s, I've been very fortunate. I've been a very high earner from a young age. And so whilst by most people's standards, I was financially successful, okay? I had a house, I had no debt, I had a bit of money behind me, I had high income. But I also felt that I'd completely screwed it up. Because here I'd been earning 6 figures throughout all my 20s, and I could have been done for life, and I wasn't. And I realized that if my brain injury had been fractionally more serious, I wouldn't have worked again. I could have been dead. And I went, holy shit, I really need to think. At the time I had 2 kids, I've got 3 now, but at the time I had 2 children, young children, and I went, I really need to rethink this. I really need to create, Paul, more security, stability. I own 3 companies, and 2 of them were totally dependent upon me. And I said, you know what? I want to take some money off the table. For me, at that point, I went, you know what? I want to have a bit more of a safety net, financial safety net to know that my family are taken care of. So as I recovered, I started to think, okay, how do I sell this one company? I sold the other 2 that I enjoyed and was engaged in, but how do I sell the one that's not dependent upon me? Because that was the most sellable one. So I went and found an advisor. And this was just another entrepreneur, because when it comes to selling your company, I think you need a competent lawyer with deal experience. I think you need a competent accountant with deal experience. But I think the most helpful one, admittedly I am a little bit biased, is somebody that's bought and sold companies before. So I went on a chat with this gent, and he went, Dan, you've got a problem. He goes, it's not big enough to sell. Because when a company's too small, it's inherently too risky. You can't really realize size. So he goes, if you want to sell to exit, you're going to need to grow. I went, well, I haven't got the time or the patience or the inclination to grow. He went, okay, great. We're gonna grow through acquisition. You're going to buy a competitor. And so that's what I did. I came up with a list of competitors and stuff that we're going to talk about throughout these 2 days. I approached them, I positioned it, I framed it, and I bought a competitor that was similar size, smaller but similar size. And in what I thought was a stroke of genius, I stroked his ego by making him the MD to run the business so I could take the backseat in the kind of the FD role. And then I went about what the business I was actually trying to do. So I let him run the business. The business today, George, was the running of the business and keeping it working profitably. And I was in the business of the business tomorrow, which was selling the company to the maximum. And so I took this new combined entity that was now less dependent upon me, and I went and I found a buyer. I went and found a buyer, and less than 12 months, so 11 and a half months after my serious brain injury, I exited the company in a seven-figure exit, which for me at the time was huge. It was absolutely life transformational. But that's not the most interesting bit of the story. As part of the exit process, I was expected, I want to say obligated, but I wasn't really obligated, but it was expected that I was going to help with the transition for a 12-month window. And most people say, oh, that transition period's awful, and you've got a boss and you're not used to having your boss and it's miserable and you'll hate it. It was the exact opposite. I absolutely loved it. Because you see, I'd sold the company to a business that had a lot of private equity backing. Significant. I mean, 9 figures. They'd raised over 130 million in several rounds. So they had a lot of money, and they literally went, Dan, what would happen if we quadrupled the company? I went, well, I don't know. What kind of time frame you're thinking, what you're talking about? Yeah, I'll happily advise, but I don't know. And they went, no, we mean this quarter. And I said, and the gentleman I was sat with, who was kind of the partner there that was managing me, was a chap called Jeff. I said, Jeff, you're joking, right? And he went, no, dead serious. And I said, Jeff, it's not possible. It cannot be done. Just like, this is just ridiculous. He went, think about it. And we were at a restaurant, Henley and Arden, Italian restaurant. And by the end of this meal, I'd gone from going, not a effing chance in hell, there is zero, it is impossible, to going, you know what? All right, maybe, just maybe it's possible. Because Jeff had said, look, we've got an open checkbook. If you can give us a plan that we think is credible, we'll back it, whatever amount of money. Fast forward 3 months, and the company had quadrupled in size. And so the 12 months was the most fun ever, because they basically gave me a free checkbook to do whatever I wanted with just a little bit of oversight to make sure I wasn't being idiotic. So I had unlimited money to test out, to grow my company, even though I didn't own it at that point, the kind of company that I was behind. It was the most fun I'd ever had in my life. And that kind of kick-started this business subsequently, and I had the next level of my entrepreneurial journey. So the people in this room, Fergus, different stages of life. Some are very much on the up and up, some are kind of going, I'm preparing to retire. Okay, I'm just saying there's a lot of different tools here, and there's, on a Venn diagram, growing through acquisition and exiting, there's 80% overlap on the Venn diagram. And even if it's nothing to do with the acquisition of assets, it's to do with hiring staff, it's to do with joint ventures, it's to do with marketing, it's to do with delegating, outsourcing to your team, it's to do with investing in technology, to staying present. It's all here, and it's all the same game regardless of what sector you're in. So that was my journey. I'm now going to give you 10 different profit to profit. So these are people that in the program got to 7-figure, or in one case 8-figure profits while they're in the program, and they all used different strategies. So the first profit to profit is Paul Goff. Paul's a physiotherapist, and ultimately he grew his physiotherapy practice to mid 6 figures with 6-figure net profit. But subsequently, he got it to 7 and multi 7-figure profits, and has stayed there for many years. Because Phil, this isn't just about making more money, it's about staying there. And he's been at 7-figure profits for 7 years, I think now it must be, at least, and stayed there. Okay? And that doesn't mean that there's not been bumps on the road. There's been plenty of problems. But when I asked Paul 5-6 years ago, when he first kind of went past that threshold, what was the difference that made the difference between him trading time for money and actually getting to this much more profitable level? And for him, it was one-to-many selling. He went, you know what? If I'm going to get paid for something, I don't want to get paid only once. I want to get paid for that thing multiple times. So how can I create systems and processes so I can get paid multiple times, right? So it can be, rather than selling one-on-one on a consultative way. So in his physiotherapy clinics, rather than see one potential patient and kind of give them the pitch for why they need sustained care, he would do little seminars in his office in Hartlepool to get a lot of people signed up in one go. Subsequently, that evolved into webinars and other various formats, right? That was one-to-many, but also how can you productize your business and what it is that you do? You can sell it once, or you can create the product once, but it can be purchased many times. And I don't want to overcomplicate it, because it's not difficult. Sometimes it's very obvious and it's staring you in the face. You just haven't thought about it in a while, thought about it with a new set of eyes. Where is the significant leverage in your business? Because you're doing the same thing repeatedly over and over again, when actually in a slightly different context, you can have a huge degree of scale. And Paul puts a large part of his success down to that one idea. He figured out methodologies so he could sell one to many and deliver one-to-many, so we could get paid for the same delivery over and over and over again in one transaction, right, from multiple different customers. How could this apply to your business? The way that I'd encourage you to kind of think this through is, okay, what are your current limitations? And we'll put it into 3 areas: marketing, sales, and operations. What are the limiting factors? What are the choke points there? What are the choke points? And then what are ideas that you could do in order to get you more leverage inside that? Don't overthink it. It's not rocket science. Sometimes the answers are staring you squarely in the face. So 5 minutes for strategy number 1, one-to-many selling. Away you go. Okay, moving on. Strategy number 2. So Faye, huge kudos for being the first member in our community to get to 8-figure profits. Faye was with the company from 7-figure revenues to multi-8-figure revenues and 8-figure profits. So it got to over $1 million a month in profit at its peak. And the way that she did it was marketing optimization. So really, with the change of pace in the world, everything's changing. The technology, the platforms are changing so quickly. What used to work no longer works. What's the saying? The only difference between salad and garbage is timing, right? It's like, okay, so if you've got the right strategy but at the wrong time, it will cease to become effective. All platforms die. They all have a life cycle. All techniques, sometimes they go out and then they come back in on vogue again, kind of like fashion trends. Like it's cycles. And you never know what's going to work. So the only way you can be more confident is with good testing. Good testing. There's a simple approach, a sales map, mapping out your sales or your marketing processes, the steps in the journey. How do you map those out, record them, or have the right mechanisms? The beauty of the technological innovation of the last 20 years is the fact that everything's more easy than ever before to record, analyze, get feedback for how things work, how well they convert, and then you can put in strategies to test the same traffic to 2 different landing pages as a simplistic example and see how well the different pages convert. You keep the best bits, you bin the bits that don't work, and you can have a more optimized process. It's a compound. It's the compound effect right there in front of you. And the business that Faye was the COO of, it was very straightforward. And yet it was the Google of its industry. Most people in the industry that business was in were 6-figure revenues. And this was a behemoth that had 8-figure profits. What was the difference? Testing, marketing optimization. So as you're thinking about this, what needs to be tested inside your business? What processes? Now, we're doing it this way. Is there a better way? That's the definition of entrepreneurship. There's a better way that compounding can have a much better result. 5 minutes. Thinking through what needs to be tested. Where can your marketing or sales process be optimized in your business right now? It's worthy of reflection, because here's one thing that I know to be true. Effort and rewards aren't equal. It's never 50-50. It's never 50-50. There's an unequal distribution. Call the 80-20 principle, but it's always unequal. And if you don't look, it's kind of like, oh, half my marketing's wasted. I just don't know which half. It's like, well, the whole point of testing is to help you determine which bit is wasted and which bit gives you better results. If you know your numbers and you know your return and you know your cash flow cycle, like how long it takes the money to come back and generate a return, okay, good. It should increase your confidence. And we'll talk a little bit later today about raising money. Because in theory, I can make a strong argument for your marketing budget shouldn't be capped. If it's generating a good return on investment, as long as you have the ability to fulfill on those orders. You know, what holds you back is not what you don't know, it's what you know that just ain't so. And so a pre-mortem for this event, what prevents you from getting the maximum value from this event is you coming in already being convinced that you know the answers, and then you're filtering for thinking of ideas that only support your current narrative and your current belief, right? Tunnel vision, and then we call this learning, like just reinforcing the beliefs, you know, the classic echo chamber stuff. I like having conversations with the smartest people I can find who have got the opposite beliefs than me, right? So I've got a very good friend, and I won't say which side I sit on this equation, but you wouldn't have to think too hard to figure it out, but around cryptocurrency, going back 10 years, and we were on the opposite sides of the table. And one of us had made a lot of money with cryptocurrency, and one of us hadn't, bastard. And I really enjoyed talking with him. Now, it didn't radically change my position, but I was like, there's something that this gentleman knows that I don't. Let me understand. I'm trying to figure out what's true. And coming back to your point about leverage, think about this, staying away from the politics. Wealth inequality is rising. There's always been a lot of wealth inequality in the UK at least, but it's rising. I think that's partly to do with the ease of access to the market, globalization. So the best products are able to get in front of more consumers with higher leverage activities. Now, easier than ever before. So naturally, the money, the market gives its money to the best products and services now available to it. Okay? Which means all the money moves towards a smaller proportion of the sellers. All right, better get your thinking cap on, because if we're getting our backsides handed to us because somebody's doing a superior job, all right, back to problem solving us. We better figure out a way that this works, that this fits, how to do it, how to innovate, how do we serve a different niche or more effectively or better than the competition. That's what the whole game's about. And that's why I believe small business owners are the ones that are truly changing things. The biggest companies in the world in 10 years' time will not be the ones in the last 10 years. You don't have to see, those videos on YouTube where they show you like the bar charts over time as time ticks on, like who the top companies in the world were or the rich people. Like if you look back 10 years, 20 years, 80, 90% change. It's like, holy crap. Why? Because the company that figures out how to solve the problems the best, all the money will move there. All right? But sometimes there's things in the way that we have to solve for. We have to raise capital. We have to open a new factory. We have to invent a new product. We have to have R&D. We have to... Okay, interesting times. So that's number 2. Number 3, third profit. Our very own Ricky Singh. First year in the program, he went from 3 to 9 million, got on the Sunday Times Fast Track 100 list, and he's now up past financial year, did 36 million. All right, I said, Ricky, what's the strategy? Tell me one strategy, Ricky, that makes a big difference. And he went, oh, that's easy. People and process. Oh, and Ricky, you weren't listening to the instruction. I said, one strategy. People and process are two very different things. He went, no, it's the same. He goes, because you can have the best people, but if you don't have the process to get the people, if you don't have the process to onboard the people, if you don't have the process to manage and lead the people, it's ineffective. And I won't go into depth into it now. You can find it back on the podcast because the recording of the session he did here last year, I think it was, is on the Dan Bradbury podcast of how he went from 12 to 36 million in a year. But in a nutshell, it was because he created a process to hire one to many. Shocker. He got sick of hiring one at a time. He went, look, if only 1 in 3 salespeople succeeds, I'm going to hire 3 people for the same job every time. And then he's like, but how many good salespeople do I want? He's like, as many as possible. George, rhymes to your marketing budget thing. So he's like, well, instead of hiring three, what would happen if I hired 30? He went, that's a problem, Jack, because I don't have enough resource to interview that many people. So he started doing seminars. So he started advertising and filling seminars to sell them on why they'd want to work for his company, and had all kinds of screening process for one to many to then recruit and onboard people. And that's the single number one strategy that he felt that drove him through that rapid growth. He was very clear about the outcomes that he wanted. It was very process driven. The outcomes that he wanted, what roles that he needed to hire to hit those outcomes. He had a variety of places where he would go and market to find A players. It still makes me laugh because if you ask Ricky's idea of fun is phoning up a double glazing company or people that come and do in-house sales, because that's kind of how his company operates, and just getting salespeople around to pitch him. And then if they do a good job, he's like, right, listen, I'm not going to buy from you, but I am going to offer you a job. So he'll be like, so his idea of fun is not, watching a Netflix series or going out to the cinema. It's, getting someone in to pitch him on building a conservatory or, redoing his curtains, right? And then just trying to find salespeople, people and process. Because how would your business change if, think of the best person you ever hired. If I go, who's the best employee you ever had? If you call that person to mind, hopefully they're still working for you. But if they're not, if you call that person to mind, and no, Julie, you can't choose yourself, right? If you call that person to mind, how would your business be different if you could have 5 of that person? If they were an identical quintuplet, it would probably change everything. But it only works if you get the process right. People and process, away you go. There's 2 phases I see typically. The phase that most in this room have surpassed is, in order to get to a certain level of size, you have to hire people for the stuff that you hate, or the bits that you're not good at, right? So for some in this room, that's the financial stuff. They go, oh, we need a bookkeeper, accountant, financial controller, etc., and that's appropriate, and you don't want to do that. Okay, now you still want to be educated, in my view, enough to be able to know if they're doing a good job. But all right, all the stuff that you're bad at. The number one hire for most people in this room should be an executive assistant or a personal assistant to give you significant leverage on your time. All right. For some people, it's sales. Some people, it's marketing. But the bit that's much harder, the second phase, is when you've got to fire yourself. And for many, I would argue, in this room, the choke point for growth is the fact that you insist on hanging on to that frigging job, right? Because you do it best. It's like, yeah, great. Congratulations. You've got the job. You get to keep it. Well done. Lucky you. And it's difficult because when you hire somebody, even if you hire well, if you are really good at that job, they will do it worse than you, especially at the start, which means it hurts you. And you get to pay them for the privilege. And that's exactly why a lot of people just refuse to get over that hurdle. It's tricky. And you don't have to get over that hurdle, but don't say you want to get over the hurdle and then refuse to do anything that looks like it. Just know that there's a price to be paid, depending on what phase you're at. It's another reason why business at the size that most people in this room are is very, very difficult. That kind of single-digit, seven-figure revenues, because you've often got an org chart that's only got one person in each key seat. So if one person gets sick, or strays perhaps for misconduct, right, and has to be let go of, it causes huge upheaval in the business. Even if you're better than most businesses and that you're quite clear about the processes and the documentation, which, let's be honest, most of us aren't, right? But even if you've got that, it still causes huge disruption, upheaval. And you're too big to be small, but too small to be big. And then you've got to reinvest profits into hiring because you can't have two people in each seat, because unless you get enough growth quickly enough, won't feed itself. And especially in today's world where we all want more money and we all want it now, can't have your cake and eat it. So if you're going to grow fat through that phase, there are a few different ways to do it. And to give Ricky his credit, he did it without external debt. You could choose to raise money, but then you are going to probably cede some portion of ownership of your business and maybe some degree of control, depending on what. All right, there's a trade-off. Or you're going to have to forego the profits yourself and reinvest them in growth. And then you get significant growth, but you've had no financial reward. And then if the company fails, you get nothing. Welcome to this motivational seminar on entrepreneurship. Okay, so yeah, it's tricky. But if you can get the right candidates ready, lined up, so you've got a wider pool of candidates, your squad is bigger. You might only have so many able to be on the field at any one time because of cash constraints, depending on your business model. But you've got a wider pool to choose from, so you can choose the right player at the right time in the match, depending on what's going on. If you're about to go on to penalties, she's coming off, she's going on. Okay, better penalty taker. Let's talk about strategy number 4. So let's talk about Nick Bolton. So Nick isn't currently a member of the community. Those that know Nick, he's been in and out of the community 3 times over the last 15 plus years. Yeah. And when he started, he was at 6-figure revenues and got to 7-figure profits, and he's fully exited himself from the business in the sense of he's not operational. And he spent a few years traveling around the UK on a canal boat that he had built, but he's got a home base in Dubai, but he spends most of his time traveling. Some in this room may know, I've not paid attention recently, but if you look on Facebook, he's always traveling, perpetual traveler. And he was spending a lot of time last year in Asia, weird and wonderful countries in Asia. So he's done a great job of removing himself from the company. And its level of profitability helped him to do that. I said, what's your secret? Of course, it's many things. A symbiotic system, but what's the lead domino? And Nick said, in a word, Dan, pricing. Pricing, because the pricing gives you the margin. If you're able to get premium pricing, it gives you the margin that pays for everything. It pays for the marketing tests, it pays for the hiring of people, it pays for the mistakes, Sussman. It allows you to figure it out. In fact, pause that thought for a second. I forgot to mention something. Think back. Over your entrepreneurial careers, there have been a couple of times, probably, only a handful of times in however many years you've been in business, when there have been little things that have changed everything. Significant leverage points that have made massive differences to your business. Just take a moment. Can you think of what one of those moments was? Maybe it was a key hire. Maybe it was a marketing strategy. Maybe it was a new product. Don't know what it was, but can you think of something that made a huge whopping difference to your business? Just to make sure I'm not talking to myself. Show of hands. If you can think of one. Yep, good. All right. So here's what I know. A lot of the strategies, so we're going to do 10 strategies in this kind of session between now and lunch. Most of them won't be applicable for you. However, you're not going to find the one that will hit if you're not looking for it. And you're not going to find the one that will hit if you're on your fucking phone. And I just say that sincerely because we're here. And I know we've all got businesses to run, so I'm not beating up on you if you've got some crisis that you need to deal with. But if you need to deal with it, then please leave the room and deal with it, right? I think that it worries me with my children because if you think about where that idea, not the strategy it was that transformed the business, David, but where it came from, as in how did you come up with that idea or strategy? I'm willing to bet, I'm not a betting man, but I'm willing to bet big money that you didn't get it from staring at your phone, okay? You probably got it from a conversation with somebody else or from deep reflection on something. If it was that obvious, you would have figured it out already. So you've got to be willing to reflect and look at things, and sometimes it's a layer deeper. So I don't know what the answer is of these strategies, but I would put it to you that quite strongly, I'd make a case for some variation of one of the 10 strategies we're going to outline in this session could be a massive, significant shift for your business in the next 12 months. But I don't know which one it is, and neither will you, unless you get stuck in. So that's the parenthetical comment. Back onto task. Pricing. So Nick, the biggest shift in his business, he was growing. Todd, quite steadily, progressively, like he was doing all right. He was doing all right. By many people's standards, doing great. But the thing that catapulted him, when he had one of these, the graphs going up to the right, and then all of a sudden it had a massive spike upwards, positive spike upwards that sustained, was when one day, and those that know Nick well, he can be a little bit of a dramatic guy. When he makes up his mind, he's kind of all in on whatever that is. They call him Nick the Axe Bolton in his board of advisors group, but, well, you can figure out why that was, I guess. But in this instance, he doubled his prices. I believe it was double. It could have been, but it was a significant increase. And all of a sudden, the conversion rates didn't change. So there was all this extra margin dropped to the bottom line. So despite him being in a business that was massively affected by the pandemic, his profits just leapt forward in orders of magnitude. Great. And he was able to sustain that, and that allowed him to reinvest in new ideas, new things for projects for growth. So the questions relate to pricing to stimulate. Are there opportunities for you here? Now, by the way, sometimes people jump to the assumption, and often is the case, that people need to be pushed to raise their prices. They don't think the marketplace can bear it, but actually that's wrong and it can be challenged. I equally want to say, I'm not naive. For some people, raising your prices is the worst possible way to solve the problem. Because you could arguably, if you are not positioned more effectively and you raise your prices above the competition, your customers will just go to the competition if they can't discern that you're a better product. And especially if you can't fulfill on it in a better way, because reputation will always catch up with you. So you actually have to be better. But some of you have got a lack of confidence. You don't think you can charge more than you can. Some of you in this room, combining this with one for many, maybe there's a way that you could lower your prices to get a bigger market share, but the way that you deliver that product or service, you can still sustain or even increase the margin. 5 minutes, where we go. All right, come on back. Any thoughts, comments, questions? Okay, so you lowered the price of the front end thing and sold less of them. Oh, so the prices are consistent. It's just that the lower cost products are sold less and the higher price products are sold more. Indulge me a second. I think that if I take a punt, it would be that if economic climate is uncertain, people are more cautious about spending. But if you've got products or services like yours where people get a taster, then they're into more expensive. They've seen proof of concept. So in times of economic difficulty, the dominant market players normally do better and grab more market share because they're seen as reliable, predictable, sustainable. So for you with your clients that have tried you out, they go, this is really good. We need this now. I'm in. They'll buy the high price stuff and keep buying the high price stuff, would be my guess. But the people that don't know you and can't differentiate, it feels like a risk. It's a new thing, so I won't try it. That would be my guess. It's so easy now for people to complain and be keyboard warriors if they're not happy with something. You're only one unhappy customer away from potential oblivion if you upset the wrong person. But equally, if you're really good and you can get raving fans, it tends to be self-reinforcing. But still, if you're in a sector, as you are, and the budgets are squeezed, people are like, oh, this is risky. But the money that is there, or where the services are still needed, will just flow to the incumbent or the more perceived trusted providers. I bought a company once that was a mail order. It sold stuff through a direct mail. Remember those days? Yes, that was a real thing. We used to send stuff in the post, like letters. God, I'm old. Anyway, a mentor of mine, I was in my 20s at the time, and a mentor of mine persuaded me to double the price of the product, and the conversion rate basically stayed bang on. No, actually, it didn't stay bang on. It went up fractionally. And so it was twice the price all the increase in price all went to the bottom line. It was selling a physical thing, and the conversion rate went up from the same number of leads. Now, that's clearly not always the case remotely, and that's why you've got to think these things through. But can you figure out a way to test it that allows you to stay within pricing integrity, et cetera, et cetera, et cetera, not screw everything up? Because it might just be your limiting belief about what it's actually worth or what the market will pay that's holding the company back. I've heard this narrative a lot, because when you're in mastermind, you see it. Like, yeah, we changed the salespeople's commission structure because the salespeople say nobody's got any money, and we changed it from we pay you, per sale to we now pay you on the cash that's collected. So if or a portion of the cash collected, and all of a sudden, instantly, all the sales team magically changed their belief instantaneously about how much money people had. So number 5, Salvatore Nataro. Salvatore has a plant-based supplement company called Vivo Life. He was 6-figure revenues. He catapulted forward to 7-figure revenues all after he niched down into plant-based supplements, because originally he wasn't plant-based, but he saw that was an opportunity, a real growth market, but one that he was also personally passionate about. And he subsequently grew it to 7 figures a month, so 8-figure revenues, so $1 million a month. When I asked Sal what was the biggest thing that propelled that growth forward, he said, it's easy. It's vision. If you want to have the best products and the best systems, you want to have the best people that are creating those products and systems. And if you want to have the best people, you have to pay the most money, right? No, because if you pay the most money, then of course it's going to cost the business more money, and therefore it may not work. So the key is, how can you get people disproportionately performing? i.e. they're batting above their pay grade, as in the business is literally getting a return on those people. And that's not meant in a predatory taking advantage kind of way. It's kind of like they are over-delivering, and the company prospers, with which then they can be rewarded, etc. The company can grow, the company can have more stability, security. Well, how do you do that if it's not a financial incentive? I mean, we literally just gave an example of how changing a commission structure, which is literally a financial incentive, caused a change in behavior. How else can you do that? And Sal's argument is one of vision. So vision made up of your mission, your purpose, and your values. So as an example, my wife yesterday spoke at an event in Leamington Spa, and it was raising money for a good cause, and they raised thousands of pounds, and it was an amazing job. And when my wife told me how much money they raised, I was like, oh, that's amazing, well done, it was fantastic. She worked over 100 hours working on this one presentation, which is more than I've worked on all my presentations ever. And so she did a great job, but also the event which she was helping coordinate and manage was just beautifully pulled off, and it raised thousands of pounds. Brilliant. But I've got one of those brains that whenever I see anything, I just, like, the business side goes to my head. So it's amazing for the cause that they raised the money for, but part of me just like, oh my God, that's horrendous. But why did I think that? Because I kind of went, commercially it doesn't work. The only reason the event worked to raise the money for the beneficiary is because all these people put in a stack of their time for free because they wanted to help. And so I kind of went, oh yeah, it wouldn't make a very good business. That was like ridiculous amounts of effort. But the people that did the event are happy. And so what happened? They were sold on the vision. They were sold on the purpose that they were trying to raise money for. So people are going above and beyond. This is why I wasn't invited to the event. Because I was like going, oh, I wouldn't do that. That's not going to work. There's going to be no ROI on that. But there is, if the labor's free. Now, this isn't about getting people here. It's not about slave. Yeah, that's my strategy. Slave labor. It's not about that. What it is about is people will go above and beyond if they buy into your vision. What it's about, who it's for, what difference is it making in the world. And I think sometimes, especially if you're like me, you can get very analytical and businessy about it, you can lose track of that. But if your employees are operating at a 6 or a 7 out of 10, if you want to gear them up to 8 or 9 or 10 out of 10, it's a world of difference. I remember Rob Stone last time, or the time before, when he spoke about the turnaround in the company. There was no extra pay in it for them, but there was a cause, a purpose, and the company turned 180 in a matter of months. Strategy number 6, Mr. Rob Stone, knowing your numbers. One of the things why people often end up in my world, Alexis, is financial literacy. I'm not an accountant. There's multiple accountants in the room, including people that are qualified accountants but refuse to be recognized, don't identify as such because they don't want it to be known. And equally, there's multiple lawyers in the room, but don't necessarily want to identify themselves. Let's be honest. I mean, who likes accountants or lawyers? But anyway, Rob came, didn't speak numbers, wasn't financially illiterate. But if you're going to grow a company and grow quickly, it's going to require money for growth. Growth consumes cash, Andy, typically. All right? So you better know your margins, you better know your cash flow, you better know your cash cycle, you better have a copy of Claire's book, right? You better have spoken to the accountants in the room, Claire, Ian, other people. You better get yourself educated. And Rob knew his numbers. And the key is, how do you know when you've got enough money to grow? Because Usman, for not all, but most businesses, if you don't have any capital reserves, anything that can go wrong will go wrong. It takes twice as long, costs twice as much money, right? I suspect many people in this room, Jen, have had that experience. All right, so you can have the perfect growth strategy. If you don't have the capital to support it, you are dicing with death. And there's a story in there of how Rob, when he first came on board, low revenues, to be honest, he was only just on the threshold about whether we'd even accept him into the program. And I challenged him, David, to get from effectively zero cash to 30 grand in cash, which I figured out if he basically didn't spend any of the profits. Because classic entrepreneur, reinvested all the money into new ideas for growth. I said, build up a bit of a reserve. A quarter later, he comes back and he's built up 30 grand, which is more money, Jen, than at that point he'd ever had in his business, in his life. He then said, I've got this strategy, I want to spend it on X. I went, don't do it. His board of advisors group implored him, don't do it. He went, screw you, it's my money, I'm going to do it anyway. He did it. What happened? Lost all the money. Now, that doesn't mean that I was right, albeit I was on that occasion. It's sometimes useful to get feedback, and then you've got to make your own decision on exits with your own capital. He basically reloaded and did it again, built up a cash reserve and then did it again. The second time he said, I know what I did wrong that time. He deployed the capital and it worked. And he found a model that he could replicate throughout the country in multiple different areas, and his business compounded at a rate of knots. So he went from 6-figure revenues to multi-7-figure profits. Now, he had a lot of ups and downs. As those of you know that were here last year, sadly, his wife passed away, and that caused significant turmoil, understandably, because they've got young children. But what allowed the business to survive, ultimately, over the long term, is the fact that he knew his numbers. So, I'm in favor of you doing a health check. That's on page number 28. Are you dialed in on your numbers? Where do you need to be dialed in? One of the first questions I will ask you, Georgina, if you go, right, we're going to do X, Y, Z. We're going to launch a new product. We're going to do this strategy. We're going to hire this person. First thing I'm going to do is look at your balance sheet. How much cash have you got? And how is cash trending, George, over time? Got to know your numbers. So, I'm going to give you 5 minutes to reflect, discuss, or do the business health check on page number 28. Away we go. Okay, come on back. Right, knowing your numbers. Here's a comment, and I'm doing this event for those that are regulars a little bit differently this time. But so for the first time in a long time, we've taken out the cheat sheet of the 6 different areas of your business. I believe, Fergus, there's 6 different core areas of your business, and you're only as strong as your weakest link. So wherever you're weak, that's where you'll find the choke point, right? That's where you'll get tripped up. So if you are financially weak, as in financially illiterate, that's your Achilles heel. That will hold your company back. If you are legally weak, you can have the best marketing and sales system in the world. Sooner or later, a legal issue will come along and it will upend your business. It will cause significant disruptions. In fact, have a think. Some of you in this room have had businesses like I have that have failed. But probably everybody in this room knows a business that was doing phenomenally well. And then almost out of nowhere overnight, it got into a world of trouble and went into administration. Who here knows of a business like that? Or at least one, right? Okay. I think fast forward another 12 months, you're probably likely to know several more, would be my guess. Now, if you think of that person, that friend, that relative, or your own case when the business failed, what caused the business to fail? What was the kind of the key factor? Yes, it's many things, but what was the key factor? If you think about it, I'll say in most cases, it was a weak link. It was a vulnerable point in the business. It was a single point of failure. It was a risk that wasn't anticipated. And of course, the area where you're strong, you tend to double down on. If the only tool you've got is a hammer, you think everything's a nail. So the marketers in the room, and I know a few of you in this room that identify as marketers, every problem is solved by better marketing. But that's not the thing that's going to screw your business up. There are some people that everything's about operations and systems and process. That's not what's going to screw your business up. Now, I think financial and legal are the two that are most overdone, especially in fast growth companies, because your company's not going to grow without the strength of the marketing and the sales and the smooth operations. It needs all 6 areas. But often, for fast growing entrepreneurs, they tend to neglect the legal and the financial ones. Okay? We're going to have a legal session after lunch, but that was the strategy from Rob, was about knowing your numbers, knowing your finances, being dialed in. Yes, have a good finance team, but at the same time, I don't think you should be doing your own tax returns, but at the same time, if you never look at those bloody documents and you don't know what they mean, it's a bit like getting your blood test done, but not bothering to, you can't read the results. It's no good having the blood tests if you can't tell if you're deficient or missing a nutrient or if you've got cancer. It's like, if you're doing the bloody test, you need to be able to read the results. Okay, that said, strategy number 7. For our client, Scott Martineau, he and Kate Mask, I'm fortunate to coach them both separately at different times. They are my only client that's got to 9-figure revenues. And just to be explicit, even though I've coached them both, and I would like to say I paid a tiny part, I'm not trying to claim that they got to 9 figures because of my coaching. That would not be true. However, they've scaled phenomenally well. And I pushed Scott and said, look, the business was sold last year. It's public knowledge, sold to a PLC for 85 million. And they deemed that to be a failure. So anybody here would like to have the failure of selling your business for 85 million? No, just me? Okay, fine. But they raised a lot of venture capital. They got to 9-figure revenues. I said, Scott, what happened? You've got the text exchange on page number 30, but ultimately, in a word, he says it's partnerships. Partnerships. I would make a strong argument, Greg, even in the world of AI. And it's funny, by the way, parenthetical comment, is it feels to me like people are more scared of AI than they were at the start of the pandemic. It's amazing how in retrospect, it's like when the pandemic and the whole world stopped and we all had to stay at home, it's like, oh my God. And now we're like, yeah, that was fine. But AI, that's really a problem. It's quite interesting, right? Like the future and the unknown causes a lot of people to be ridiculously fearful. And yet when you look to the recent past, there were things that were arguably much greater thing, but we're discounting it because it was in the past. Yet we're choosing to be fearful about going forward. Anyway, back on track, Ben. Stop getting distracted. I'd argue even in the world of AI, hangs on relationships. People are the leverage. People inside your company or people outside, strategic partnerships. The thing to think about, Usman, is one person's trash is another person's treasure. In other words, there are certain things that you do really well, and consequently you discount them a little bit. You don't think that that's important. But other people do that thing that want that thing and value that thing that you do well. And inversely, there's things that you do poorly and that therefore you put a massive value on it. So here's a personal example for me, Manny. Generally, as an entrepreneur, I've been really strong at sales and monetization and lifetime value of clients. Comparatively speaking, comparing me with me, I've been really poor at lead generation. Right? Natural inflection, kind of personality type, natural skill set. I don't know. Combination of things. But I kind of poor at lead generation, but really good at the kind of conversion, back end, maintaining client relationships. Strength, weakness. Okay, or weakness, strength. And one of the biggest leaps forwards I ever had was a strategic partnership where I found a company that the exact opposite. They were epic at lead generation, but really bad at the back end. And we figured out a way to make that work where we could share resources, share skills. They got to benefit from my strengths and I got to benefit from their strengths. Okay, so both companies were bigger, stronger, more profitable as a result of that relationship. Subsequently, I ended up buying that company, which was also tremendously lucrative. Value was created, Fergus. Value was created because we saw the relative strengths and weaknesses. This is entrepreneurship at its finest. Okay, there's all kinds of opportunities now. There's businesses that are hurting, which just means that they've got skills, assets that aren't uniquely deployed. If you can figure out how they fit or how to solve those problems, in fact, I won't identify him because I didn't ask his permission, but the somebody here today that is here because they sent out a message and they went, hey, Dan, I've seen XYZ. I do ABC. Oh, there might be mutual beneficial interest there. Send me the email. In my memory, less than an hour or two later, we had a phone call. And I went, yeah, great. Come on down. Come on down. I've no idea. But come on down. Try it out. Let's have it. And it may go somewhere. It may not. But developing those relationships, maybe they'll blossom, maybe they won't. But give some thought to it. So I've got 3 questions there about partnerships, problem solving, and accountability on page 31. You are only one strategic partnership, relationship away from 2x, 5x, 10x your business. There's multiple examples of that in this room. Perhaps it's a strategy I haven't given enough thought to, David.